everything is on sale. These are the best prices and the best availability I've seen in 4 years. Is the world all of a sudden better? Is everything behind us? Is it green shoots and prosperity ahead of us? Well, that would be nice if so. But if not, if things aren't better, if this is just the quiet before the storm, then this is the best value across the board in silver and gold that I have seen in 4 years.
Gold prices slipped on Wednesday as the dollar rose and bond yields strengthened after data showed U.S. private payrolls increased more than expected in July. The dollar rose 0.4% to more than a 3-week high, making gold more expensive for holders of other currencies. Benchmark U.S. 10-year Treasury yields climbed to their highest level since July 10th. In a recent interview, Andy Schectman, the CEO of Miles Franklin Precious Metals, highlights the prices and availability of gold and silver in the market. He believes that the prices of these precious metals are the best he has seen in 4 years. This means it's a good time for people who want to buy or invest in gold and silver. However, Schectman cautions that the world has improved economically or that this is a temporary situation before things worsen. The significant movements of gold and silver from major ETFs like GLD and SLV have been essential talking points in the financial world in recent years. Schectman points out that a massive amount of 200,000 ounces of gold was recently taken out of GLD, and at the same time, a staggering 1.5 million ounces of silver were withdrawn from SLV. However, what makes this situation intriguing is that the destination of these precious metals is still unknown, leaving ample room for speculation and conjecture. According to Schectman, silver in particular remains an undervalued asset and an opportunity of a generation, given its various positive metrics, such as supply-demand dynamics and its historical ratio to gold. Silver has outperformed stocks since 2000. Even still, the silver price is currently less than 50% of its previous all-time high. He emphasizes that gold should not be disregarded either, as it is gaining importance in the global financial landscape due to events like the rise of the BRICS countries and the Shanghai Cooperation Organization. Regarding the banking system, Schectman raises concerns about the potential of additional bank failures. He highlights the issue of uninsured depositors being bailed out secretly by the FDIC and the ticking time bomb of over $1.4 trillion in commercial real estate loans set to mature. Many of these loans are from small banks, and many need to catch up on payments, which could lead to more defaults. This is a considerable risk for the banking system. To make things worse, much money is leaving commercial banks, which could cause even more problems. If this keeps happening, there could be more bank failures in the coming months, affecting the financial system. Now watch excerpts from Andy Schectman's interview with Liberty and Finance. Be sure to watch the entire video and consider subscribing to our channel. Remember to enable post notifications to stay updated on our latest uploads. Thank you and enjoy the video.
Last week, 200,000 ounces of gold came out of GLD. Where the hell did it go? And in silver, 1.5 million ounces of silver came out of SLV. Where did it go? Ted Butler said it looked much like metal being sent to places of more urgent need as opposed to plain vanilla liquidation by investors. It's exactly what it is. It runs cover for acquisition. That's what big money is doing. Is it going to India? Is it going to China? Is it going to Saudi Arabia? Who knows? But anyways, the point of it is that everything is on sale. And, you know, we've done silver by and large for the past 3.5 years, almost every single week. Why? Because it still is, independent of the special today, the most undervalued asset on the planet. It still is, in my mind, the value of a generation, and try and poke holes in that on every single metric: supply, demand, its ratio to gold, both geologically and historically. Silver is an opportunity of a generation, and I mean that in my soul. But by the same token, when you see gold revalued tier one and you see gold's significance in all of the talk related to the BRICS and the Shanghai Cooperation Organization, and the legitimacy that it gives, and the acquisition and repatriation by the biggest money in the world, tells me you do not want to count out gold. A lot of people like silver because they wonder what the world will look like when everything goes crazy. So do I. So trading in gold is never a good idea in that environment. You get hit over the head with a baseball bat trying to trade a 1 ounce gold coin in that environment. But the 1/10 ounce gold coin is something that offers great liquidity and great flexibility. I do think there is a lot of normalcy and recency bias right now, and I draw the analogy of the being in the eye of the hurricane. We saw the first half. People are now out for a walk because the sky is blue and everything is great, but to ignore the trailing edge that is coming is a mistake. And I think that's what's happening. I mean, if you look at the bleed down of all of the supply across the globe, it's extraordinary. There's one whale on COMEX right now, and it's a Chinese company, I believe, that has accumulated 50 million ounces of silver contracts. Are they going to stand for delivery? And guess what? It's in the other category. The others who have been very methodical at draining the world's exchanges. And this is a massive position. Are they going to stand for delivery? I bet they do, slowly. Anyways, the point of it is that you're seeing a massive drawdown at the very top. The LBMA, the ETFs, the Shanghai Gold Exchange, and the COMEX. This is the epicenter of where all the supply comes from. So does it ultimately have an effect on this industry? Of course it does, especially when something happens in the banks. Maybe they get bailed in or whatever it is that triggers things. It'll have an immediate effect. I say that to you because the ironic thing about all of this, in the middle of the eye of the hurricane, when all of the supply at the top is being drained, when the biggest money in the world, the others, which are the sovereign wealth funds and the family offices, the central banks, are on record buying spree, using suppression of price to run cover for what they're doing. But what is betraying the suppression of the price is the bleed down in the exchanges. It bothers me that the FDIC is hiding the bailout of these uninsured depositors, that this is supposed to be bail-ins. And, this time the Kansas bank examiner said it was an isolated event and that the Kansas banking industry is strong. Where have we heard that before? This is a story that has not seen its final chapters. You have a commercial real estate debt ticking time bomb that, you have over $1.4 trillion in commercial real estate loans that mature this year and next year, 70% of which are owned by the small banks and 61% of which are already delinquent. And these commercial real estate loans, the majority of which are called non-recourse, that they're owned by corporations that can just drop the keys, walk away, and go bankrupt. And you're going to see that. And the ramifications of that, to me, is extraordinary to what happens to the banking system. It's interesting if you look at everyone is focusing on the small and regional banks, and as they should. This is exactly the kind of stress that will drop more of them. But if you look at the amount of money that's leaving the commercial banks, the big sophisticated money, it dwarfs the amount that is leaving the regional banks. These are big money that are leaving the systemic risk of the banks, and I would argue maybe the ultimate, the probability of some really big bank failures heading into the third and fourth quarter as these loans reset and drag down with them lots of banks and lots of counterparty systemic risks, and they're going directly to the Treasury or directly to the government and buying, U.S. Treasuries.
In a significant move that signals a global geopolitical shift, the BRICS nations have announced their plans to introduce a new currency backed by gold, presenting an alternative to the credit-based U.S. dollar. With the decision made a month before the upcoming BRICS summit in Johannesburg, the initiative has attracted the attention of numerous countries eager to join this influential bloc. Schectman sees that the likelihood of the BRICS nations eventually issuing a gold-backed currency is inevitable given the gold's Tier 1 reserve status and its increasing accumulation by central banks, particularly those of BRICS nations. More than 40 nations have indicated an interest in joining the BRICS bloc of major developing economies as it seeks to expand to grow its political clout. South Africa's ambassador to the group said, "This trend, in Schectman's view, reinforces the notion that these nations are moving towards tighter collaboration and integration." Let's get back to the interview.
Everyone's focusing on the BRICS and the August 22nd meeting. Are they going to not issue a gold-backed currency? Look, ultimately they will, right? The gold was Tier 1 revised. The central banks are gobbling it up. The BRICS nations are all the ones producing it and accumulating it. It's inevitable. Whether it happens the 22nd or not is irrelevant. But what I took away from it is the inclusion of the Shanghai Cooperation Organization and the Eurasian Economic Union. Now, I have mentioned them in nearly every interview I've done about the BRICS, simply because they have so much crossover in membership, where Russia belongs to all of them, where Saudi Arabia, as an example, has applied to the Shanghai Cooperation Organization, to the BRICS, to the New Development Bank, on the Belt Road Initiative. All of this symbiotic crossover amongst these groups told me that there's no question but that they're going to, at some point, be connected more than just in trivial, coincidental membership. That you know, there was too much in common for me to ignore that. And I would constantly talk about them, saying when you put all of these groups together, the Belt Road, the Shanghai Cooperation Organization, the Eurasian Economic Union, and the BRICS, you're darn near talking 90% of human population. Well, what Jim did was to put a bow on that thesis and say that they are going to combine these entities into the BRICS at the meeting. Now, one of the things I talked about in my presentation there was that if you Google how many countries have applied to the BRICS, last year at that meeting it was 16. Now it's 41. It's growing, no question. This is a trend in motion and is rapidly growing. But if you try and find the list of those 41 countries, everywhere I would find, all I would come up was 25. Excuse me. If you back out of the Eurasian Economic Union and the Shanghai Cooperation Organization the countries that have already or are already in BRICS or have formally applied and add it to 25, you get darn near 41. So what he was saying, I believe, is supported on many levels. I believe it to be incredibly logical and makes great sense that these entities, these groups, these countries would coalesce into this common union. And really, to me, that was the most important takeaway regarding BRICS, that this is a trend in motion, that it is gaining momentum, that it is gaining mass. And it's inevitable. And I believe Jim believes that it will have a greater impact than a lot of people in this industry, not myself, but a lot of people believe it will. And his thesis was very interesting. In a nutshell, he said if they really wanted to make it tough on the West, they would issue one brick equal to an ounce of gold. He said the West will destroy themselves. The BRICS don't have to do anything, in the respect that if they realize that there's almost 200 trillion in obligations that we have, funded and unfunded, really the only pathway other than massive increase in taxation, really, or default, would be to inflate. And by inflating, the value of the dollar drops, the price of gold goes higher. Therefore, the price of the BRICS currency goes higher. If, like most of the world accumulating gold, the West decides to accumulate gold, the byproduct of that would be to sell dollars, decreasing the value, buy gold, increasing the value of the BRICS currencies. They don't need to do anything.
Looking ahead, gold and silver prices will likely be favorable for investors. However, caution is advised due to uncertainties in the global economic situation and potential risks in the banking system. What are your thoughts on the future potential of gold and silver as investment options? Please share your thoughts in the comments section below. If you found this video informative, remember to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.